This is our Tax Insight course, which you can find at taxes.youneedabudget.com. This is day 2 of several days. I want to kind of dive into something pretty fun, which is specifically the income side. Now, is all income the same? Absolutely not. Far from it. Income can be very, very different as far as the tax code is concerned. And so today, I want to talk about calories. For the first one, let's talk about water. And the caloric density of water, I believe, is 0. For our purposes, water is calorie-free, which means it is tax-free. You do not pay income tax on it. And you might consider this to be something like municipal bonds, where the interest that you earn from that bond is not taxed. Okay, let's see, what else could we talk about? Well, let me put this in the blender first. So we've got that. Tax-free income, municipal bonds as an example. And then let's go to skim milk. Skim milk has, I looked it up here, 11 calories per ounce. Not too bad. So let me think about what that could be. 11 calories per ounce. This could be unearned income. It avoids the FICA, which we'll talk about in a second, and that's why unearned income, as far as taxes go, is superior to earned income in that regard. You don't have to pay FICA. So let's say that our tax return has a little bit of unearned income in there. All right, let's see. Now, grapefruit juice, some ruby red grapefruit juice. This, you would think, you say, oh, that's grapefruit juice. That's terribly healthy for you, but it's actually, as far as calories go, it's worse than milk, but it's not too much worse. And so you will look at grapefruit juice having 12 calories per ounce, and we could call this your earned income, your wage. Earned income is not as good as unearned income, because on earned income you pay not only the income tax, but also you pay the FICA, or Social Security Medicare tax. I call it FICA for short. Remember, income tax applies, same as the skim milk, but also you have the FICA. That's that 7% so that you have pulled out of your paycheck automatically, and your employer pays the other half of the FICA for you. So that's some ruby red grapefruit juice, some earned income. Not too much, I suppose, but a little bit. We have something that's fairly dense as far as calories go, and that is one of my favorite desserts, which is a root beer float. So I happened to make some homemade ice cream the other day, and I'm going to make myself a little root beer float. Here we go. Well, it's pretty heavy on the taxes, so I'll add a little more ice cream. Now, we've got our root beer float halfway made. Let me just add a little of the good stuff, root beer. Delicious. Excellent. All right, so we've got a root beer, we got a root beer float there. That looks delectable. That is one of the worst tax situations you can be in. What tax situation are we talking about here, where you've got so many calories in that beverage? I'm talking about self-employment, okay? That is a very, very heavy tax burden to bear. And that situation might be where you're a freelancer, you're a sole proprietor in some way, and you're just earning income on the side. What happens is you earn a profit and you have to pay income tax, standard, so it's much like your earned income, I suppose, but then it gets worse because you've got to pay the FICA. So we had this one here, the ruby red, that was your wage, where you're paying that 1/2 of the FICA plus your income. But with the self-employment, now you're the employer and the employee, so you have to pay both sides of that FICA. And so you're looking at, as I do this video, 15.3% FICA, and then your income tax on top of that. So if your income tax is, let's say, 20%, you're looking at 35% right off the top for your profit from self-employment. And that is a pretty tough pill to swallow. Let's see, it's got pretty foamy, but I'm gonna try and not make a mess here. Let me grab my lid really quick because I have a feeling that's going to get messy quickly. So, oh, that sounded awesome though. I hope you heard that little plop of the ice cream. Well, this isn't looking too bad, right? But there was one cool tax that I like. It's not tax-free. It's not your unearned income where it's taxed but avoids the FICA. It's the capital gains tax, long-term capital gains tax. And that one is pretty darn healthy. We talked about water being calorie-free, and this one is pretty darn close. This is tomato juice. I think it's got about 5. Let's see, we've got 6 ounces here, 30 calories, so 5 calories per ounce. That's pretty good. And that is your capital gains, long-term capital gains. So if you were to buy a stock at $100 and then sell it for $200, your capital gains is $100, and your tax rate is going to be lower than your normal earned income or your normal income tax rate. It's the capital gains tax. And even if you're a lower in the tax bracket, the capital gains tax is lower. If you're higher in the tax bracket, it's still lower than what you would have paid on your normal income. So when you have an asset grow and then you sell that asset, that's a capital gain. I'm simplifying, but that's the basic gist of it. And that means that you're taxed. You report that gain, and the IRS wants their capital gains tax from it. It's a great tax because, one, you can control when you pay it because you can control when you sell, and two, it's lower, much lower sometimes. If you're looking at earning income where you're paying 35% on the next dollar earned, looking at capital gains tax, it's 15% at the time of this recording, and so it's much more favorable. I hope it stays favorable. So let's add some of that goodness. This is some, I hope I wasn't supposed to shake first, but I suppose the blender will solve that. All right, so we've got all this. This could be one tax return, and you're basically saying, well, I have kind of a mix of income, and so all these different types of income are taxed at different rates. What we want to do is, over the long term, you work toward shifting income to different classifications. So if you can shift some of your self-employment income to a earned income or wage income, you've saved yourself some FICA tax, right? If you can shift some of your wage income to unearned income, such as interest income or things like that, then you've shifted that tax a little lower because you've avoided 1/2 of the FICA. If you can shift some of your income into that interest that you're earning from that savings account, if you could shift that into municipal bonds, then it's tax-free income. So you can see that someone could have quite the mix of different tax rates applied to different income. And you can see how favorable it would be to be focused on, over the long term, earning income that is treated favorably by the IRS. So let's see how it turns out. Let's see, liquefy. Fantastic. It smells delicious. Put that right there. Ooh, this smells good. Taxes. I think I would have rather just had water. We'll see you guys tomorrow.